I'd like to present to you the student price index, which we do together with DREF, with Felix Bauer, and in cooperation with Immobilien Scout 24, which is a major platform for real estate transactions in Germany. Our idea was to give more data to this market because it's a very tense market in Germany. Student housing is really a hot issue right now. So what we do actually is, I do not want to go too much in the details, but we calculate a hedonic price index. That means that we are really able to identify the pure price trend. You know, each real estate or each building is unique in its location, with its characteristics, quality. And what we do is we have a lot of data, and therefore we are able to calculate the price for each of these characteristics, so we can say, okay, a dwelling that is 1 kilometer far away from the university has a discount of, say, 50 cent per square meter. So therefore we really have the pure price trend in the rents. Well, as I said, we work together with Immobilien Scout. Our view is we have the perspective of a student who is looking for a new dwelling, for an apartment in the free market. So we do not have any administered student housing which is supplied by the state, only private renting. And Immobilien Scout, well, at least we have more than 3,000 advertisements per year for each of the university towns we have in perspective. At the moment we have 15 cities we analyze, and maybe it will be more in the future. So, and that is what's really interesting for you. These are the results. We published the results yesterday, so these are very actual and current. I distinguish our student markets in 3 groups. This is the first one, which has a very high, very strong increases in rents. You see here Berlin. In Berlin, prices for apartments and student and shared housing have increased by 37% since 2010. This is a major increase in all student cities. But second, there is the city of Osnabrück. Osnabrück, I don't know if anyone is familiar with it. It's in the northern part of Germany. It's a small town, but you can see here there is a high potential in such cities, because in a lot of cities there is a lot of influx of people, not only students, but it's also people from the rural areas or young employees who are looking for a flat in the city. So Osnabrück is one example, and you see here, of course, Munich and Stuttgart, where we have price increases above 20% since 2010. And we have the next group of student cities with not so strong price increases, but nevertheless it's still a very high potential, especially for investors. These are cities like Bremen, Leipzig. This is the first time we analyze Leipzig, and you see here there is a strong price increase. Leipzig is really a booming city in the eastern part of Germany. We have Cologne, Hamburg, and Kiel. In all these cities we have a very constant increase of rents in the market. And finally, there are some markets which do not have such a high dynamic, but nevertheless rents are increasing. One exception, it's Frankfurt. Frankfurt, maybe in Frankfurt we have a lot of project development, especially for student housing. You can see the first reaction, so there is a stagnating market given the rents, but in all other cities at least rental prices are increasing. Well, and what is really interesting for you, if we compare the price increases, the rental price increases for the student market with that of the rest of the market or the whole market, you can see student housing is outperforming the market as a whole. You can see here in Munich, for example, we have a price increase since 2010 of 25%. In the whole market, it's 14%. You can see it's in Berlin, it's in Osnabrück, in Leipzig, in Jena. Well, what is the reason behind it? We have a strong competition for low fare or low priced dwellings in Germany. We have very high competition for all apartments with smaller size because we have a lot of single households in Germany, especially younger households are coming to the cities, but also we have pensioners who are seeking for low fare apartments. So this is the really hot, intense market in the German housing market, the market for middle-priced dwellings. And this is a map that shows you the level of rental prices. I just talked about rental price increases, but this is the level of prices. We calculate prices for a typical flat in most of those, in all of those 15 cities, and you can see here there is a strong gap between the levels. You see, in Munich for 30 square meters and a distance to the campus of 1.5 kilometers, you have to pay some 600 euro per month. Of course, this includes heating costs and some other costs, but it's a lot for students. You can see here Siegen or Leipzig, it's quite a half of it. So it's a really it's a real gap between prices. And you can see here Osnabrück, we have 25% increase of rents, but the level is quite low. It's well below 400 euro per month at the moment. So what are the conclusions? And just want to give you some food for discussion right now. Well, I see a lot of opportunities in the student housing market. We still have a high demand for student housing, not only from students, but also from other kind of single households. So, and on the other hand, construction activity in most cities in Germany is lagging behind. So we have a huge gap and a shortage of supply because there are not enough building sites. So my forecast is that prices will be high in the German cities at least until the 20s. You can see from our student index that not only the big cities, the metropolis have high prices, but also there are a lot of opportunities in mid-sized cities like Osnabrück or Leipzig or some other cities. So it's worth a look to look around for the smaller cities. And just one note of caution, there are a lot of project developers who try to sell more luxury apartments for students in Germany. I think this is quite risky because students in Germany are very price sensitive and their parents are very price sensitive too. So not a lot of students are really willing to or able to pay 600 or 700 euro per month for living. So therefore, I think the opportunity is best for those investors who can sell and offer some mid-priced dwellings and flats, but not so much in the luxury section. Thank you very much.